There are so many things I want to say about NFT, except I kind of felt like there's nothing worth saying. To start off, what's NFT, or non-fungible token? According to Wikipedia, a non-fungible token is a financial security consisting of digital data stored in a blockchain, a form of distributed ledger. The ownership of an NFT is recorded in the blockchain and can be transferred by the owner, allowing NFTs to be sold and traded. NFTs can be created by anybody and require few or no coding skills to create. NFTs typically contain references to digital files such as photos, videos, and audio. Because NFTs are uniquely identifiable assets, they differ from cryptocurrencies, which are fungible. Before I get into more detail, please leave a rating or review wherever you're listening to the podcast if you're interested in topics like investing and want to hear more. It will really help keep the podcast going to produce more content like this. Welcome to Personal Finance Cat, where I share my personal take on personal finance. Back to what I was saying. An NFT is unique, although I've heard instances where you can create more than one copy of the NFT. Whereas for cryptocurrencies like Bitcoin, one Bitcoin is the same as any other Bitcoin. Like the Wikipedia definition mentioned, NFTs typically contain reference to digital files. So in a way, they're like artwork. As with any artwork, it's very subjective. But if enough people think the art is valuable, in other words, on the supply and demand model, there is a lot of demand, the price would be driven up because the supply is limited, and in most cases, only one. There was some sort of crazy surge of NFT prices during the early part of this year, and news about some random NFTs selling for millions of dollars. For example, a 22-year-old computer science student from Semarang, Indonesia, converted and sold nearly 1,000 selfie images as NFTs on OpenSea and made $1 million. Another example is the Bored Ape Yacht Club, which is the collection that features profile pictures of cartoon apes that are procedurally generated by an algorithm. The project launched with a live pre-sale on April 23, 2021. As of 2022, sales of the Bored Ape Yacht Club NFTs have totaled over $1 billion, with many celebrities as their patrons. The last example I'll give is how NFTs are changing sports, specifically by allowing the tokenizing of sports moments, play cards, and memorabilia. NBA Top Shot sold a clip known as a moment, featuring a LeBron James dunk sold for more than $200,000 in April this year. So now that you had an idea of what NFTs are and how crazy and fast this market had been, let's talk about what's happening now in this market. Well, starting from this news headlined, Jack Dorsey's first tweet NFT went on sale for $48 million. It ended with a top bid of just $280.
What?
I hate to break it to you, the prices of the vast majority of NFTs are tanking. Anyway, long story short, there was this Iranian-born crypto entrepreneur who purchased the NFT for $2.9 million back in March 2021. Basically, this NFT is just Jack Dorsey, the founder of Twitter's first tweet, and the world's first tweet, apparently, which literally reads, "Just setting up my Twitter." Then in April 2022, he announced on Twitter, of course, that he wished to sell the NFT and pledged 50% of its proceeds, which he thought would exceed $25 million, to charity. The auction closed 2 days later with just 7 total offers, with the highest bid being about $280. So how did this happen? Forbes did an article to try to explain why this NFT's price dropped so much. And basically what it boils down to is that some NFTs are nothing but a public stunt. Okay, but how about those NFTs like the Bored Apes? Well, apparently they are crashing too, although not as bad as the other NFTs. According to an article on futurism.com published on June 30th this year, the Bored Ape Yacht Club's blue chip collection have seen price floors fall by 30% or more in just 30 days. Yes, it's a bloodbath out there. If you want to look at some more statistics, feel free to look at this article published by beincrypto.com. I'll link the article in the show notes. So what's the moral of the story? Time and time again, Warren Buffett's quote-unquote old school investing philosophy just works. Do not invest in something you do not understand. To me, NFTs are artworks, and most people just aren't good at evaluating art. Another cold and hard fact is that most artists are struggling financially because making it in the art world is just extremely difficult. So similarly, what NFTs will eventually become is really hard to say. That's why art collection is almost always a rich people's game. And by that, I don't mean just normal rich people. I mean the mega rich. And the safest bet is in those artworks that are already very established and well known. Now, I'm not one who would use absolute terms and say that this is the end of NFTs, just as cryptos can be valuable because they have good attributes to serve certain functions. NFTs can have value too. In my episode about Crypto One-on-One, I talked about how Bitcoin is a very good candidate for being digital gold, assuming enough people think the same. NFTs, I believe, are going to provide the rich people with digital bragging rights. So I can reconcile with the existence of NFTs. And if you happen to be the one who has a keen eye for identifying what's going to be the digital Mona Lisa, then by all means go for it. Explore and invest, and maybe even create your own NFTs. From what I know, and based on Wikipedia, it's not hard to make your own NFTs. It doesn't have to require coding skills, for example. However, you do have to make a small investment in order to get on platforms like the OpenSea. But if you're just a normal investor like me, should you invest in NFTs? Nope. Alright, this is it, my friend. Thanks for listening to the end. If you enjoy this episode, please kindly leave a rating or review on Apple Podcast or wherever you're listening to this, and subscribe for more content. I will really appreciate it. Until next time.